All right, greetings everybody. Welcome back. Hello, hello, hello. Happy Wednesday. Chris here, bringing you another weekly Wednesday discussion. It is my pleasure to do so. Today, we are going to be diving into the world of the Aroon indicator or Aroon oscillator, however you want to refer to it as. Doesn't offend me in the slightest, but nonetheless, that is what we'll be talking about. Indicator spotlights are always kind of fun because we get to go straight into the practical charts. I talk a little bit about the indicator and where it comes from, how it's calculated, and all that stuff, and then we dive right into the charts and talk about some strategies that we can use or that traders use on a regular basis with the indicator. So gives you something else to think about, something else to throw in the toolbox. But without further ado, let's go ahead and work through our disclaimers as we always do. These are the same required ones as always. Not a single word of these has changed. So please just bear with me here. I'm just going to leave them on screen for a brief period of time, and then we'll kind of cycle on through them. But nonetheless, it's a pleasure having y'all back here. Hopefully everybody's having a good trading week. And oh my word, the markets have been insane. Specifically, CL oil has been absolutely bonkers. So hopefully if you're trading oil, you're being very, very cautious with those stops. Just my goodness gracious, with the world going on right now, coronavirus is just leading to all kinds of crazy market happenings on top of fears of oil price dropping, causing all kinds of speculation. So there's a lot of stuff going on in the world right now, causing insane market swings. So we are seeing all kinds of historical events occur. Let's move along to the next one. Here we go. But nonetheless, keeps us young, right? Keeps us young, keeps us sharp, keeps us stimulated, all that good stuff. But either way, good vibes all along the train. Trading was easy, everyone would do it. We're stronger than most. We've got to be. Or crazier than most, one or the other. But it's not crazy if you're beating the markets, right? That's what you got to tell the wife sometimes. Moving along, moving along. Here we go. Already moving along. I believe we have just one more after this one. So moving at a brisk pace here this morning. You know me, already pumped full of that delicious coffee bean liquid. All right. Last one, folks. You have done it again. Goal achieved. All righty. So back it on up. What in the world is the Aroon? Well, it is a fun word to say, that at the very least. It is actually an indicator that I find a lot of traders are unfamiliar with. So this is one that I thought we should do one on. It is offered on the Finamark platform. A lot of platforms actually do have this, and many people just kind of gloss over it. So it is something that is easily accessible to pretty much most traders just out there. Obviously, no guarantee your platform if you're not using Finamark or one of the ones that has it. You know, no guarantee that you have it, but nonetheless, it is a widely accessible indicator. Anywho, and once again, if you were here in the very beginning when I kind of began my spiel, it is indeed an oscillator, and oscillators are fun. At least in my opinion, oscillators are a lot of fun. So that is a little bit about the Aroon on its face value. It actually was developed by a gentleman named Tushar Chandi in 1995. So it's really not all that old, relatively speaking. He's a gentleman out of India and came up with the oscillator. And a fun fact about the oscillator that makes it easy on the eyes. And let's go ahead and switch over to the charts now while we're talking about it. So if you look down here at the bottom of the screen, you actually see it in, in real time. It's moving along. We currently have the E-mini S&P 500 on, and it is on a 15-minute chart. Now, the Aroon that you're looking at is a 14-period Aroon at the moment, but we'll talk about that in a moment. But as you can see, it's relatively, pleasing aesthetically. It's pretty easy on the eyes. A lot of indicators use like the sine method. The sine method is when you're going to see the line have a more, it's going to look more wavy. It's going to have a lot more bends, curves, and characters to it. This is going to use more of a triangle pattern where you're going to see sharp triangle shapes and sharp triangle shapes, inverse, 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 just kind of flipping back and forth. And the reason that I'm bringing that up is it makes it easier on the trader, at least in my opinion. It's easier to get a clean read looking at this than trying to focus on a bunch of lines that are kind of wiggling around at a very, very dynamic pace. This is it's very binary almost. It's zeros and ones. It's either up or it's down, and we'll talk about what all those things mean. But basically, this indicator here is something that is used to identify trend changes a lot, just like a lot of the oscillators that we're familiar with do. But before we get too deep, I'm going to show you guys how to apply it to your chart. That way you can follow along this entire process. So I'm going to go ahead and go up here, guys, to this top center of the screen where you see the show indicators options, where a little nifty toolbar always is. And I'm going to click that, okay? And once I click that, I'm going to actually just get rid of it real quick just to show you what it would be like if you don't have it. So this is what it would look like on Finamark if you didn't have it in place already. So you'll look on your right side here, this right column, you'll see it says section 1 candlesticks and nothing else under that. Now the Aroon is something that does require a second section. It does not directly overlay price because it is an oscillator. So we're going to go down here to the bottom right and we're going to click this add new section button. After we click this add new section button, we're going to see section 2 appear up here. It is highlighted already, indicated by the brighter white writing. And then we're going to see a bunch of options develop over here on the center column. And Arun, because it is sorted alphabetically to make it easier to find, is going to be right here near the top. It's going to be our 4th or 5th option down here. So we're going to click on that guy. And by clicking on that, it's going to automatically place it on the charts. Now, if I take a peek back here by clicking that show indicator button and just kind of close it all off, you'll see that it equally, whenever we make a new section, it splits the charts exactly 50-50, but that is a little bit overkill in my opinion, and all we have to do to make this portion of the screen a little smaller is go near this gray line. It'll generate, an up and a down arrow. We just click and hold, and we can drag this bad boy down and make it as small as we want or as large as we want. Personally, I kind of like it somewhere around 25 to 30% of the screen, if that. So that does it for me right there. And then as always, when we're talking about settings with the Aroon, and we might come back to this in a second, all we have to do is go back to the Aroon under the section 2, and we're going to click this cogwheel over here after highlighting section 2. Here's the cogwheel. And once we click that cogwheel, it'll open up some options here. And the options are quite simple. All we can adjust is the period and then the color of the lines. Okay. And the blue line is going to be our Aroon up line, and well, whatever color you call this, peach. This is quite a difficult one for me to name out here. I suppose peach works. The peach line is going to be our Aroon down line. So we have an up line and a down line and a period line. Okay. And right now my period is set to 14, which is a lot of platforms' defaults. However, a lot of Aroon traders out there will recommend 25. Whoops, numbers. We'll type 25 or recommend 25. But my personal taste on it before we get too deep it's very similar to adjusting periods on a moving average. If you're trying to analyze smaller market moves, not higher time frame things, then obviously you're going to want that period to be smaller. So 14 really is quite a nice period to assess. It's basically taking a look at the last 14 periods instead of the last 25. So you've got a smaller sample size that it's averaging together to get those results instead of instead of a larger one. So it reacts a little bit quicker. But nonetheless, let's put it back to the 14 for now. Let's go ahead and click the save button. And let's get on out of here and we'll talk about it. So now we are looking at the E-mini S&P 500 with the Aroon indicator on it. So what is the Aroon indicator? Well, the Aroon indicator is a technical analysis indicator because we are analyzing price, historical price numbers, things that are here. These are numbers that are measurable that all of us have access to, falling under the tree of technical analysis. So it's used to identify trend changes in the price of an asset as well as the strength of a trend. So one of the two things that we get from the Aroon indicator is strength of trend as well as trend changes. So a little bit of both there. Now, in essence, the indicator measures the time between the highs and the time between the lows over a period of time. Now, you already know, or I'm sure you're already guessing this, but the period setting, that is going to be the period that we are obviously measuring out there. So if we're trying to analyze what the highs are doing over a period of 25, that means it's going to look at the last 25 candles because I'm on a candlestick chart, and then it's going to be giving my reading based on those last 25, right? Okay, but nonetheless, so the idea is that a strong uptrend will regularly see new highs, and a strong downtrend will regularly see new lows. And also, the indicator can let us know when really neither one of the two are happening. So it gives us another way to be attentive or to understand what the market is doing and where she's trying to go. And ultimately, that is how we dictate our trades, right? We get an idea based on some type of sensory input where we feel the market is heading and why it's heading there, and we use that as an opportunity to get in. Looks like we may be amidst an Aroon up cross right now. If you look in the bottom right-hand corner of your screen, you're seeing this blue line is actually crossing above the orange line here, or peach line, which is the Aroon down line. It's starting to cross its way back up. Now, something that's worth mentioning, if you look on the right side of your screen here, okay, you'll notice that these lines don't actually go to this gray bar. There's a little bit of a space there. Don't be confused by that. They actually oscillate between 0 and 100. So the top up here, and actually let me see if I can throw a line on this and make it a little bit easier for you. So we'll make the green at the top. We'll make a green line at the top right at 100. Okay, boom. And down here at the bottom, we're going to make a red line, and that's going to represent 0. Having a hard time getting my mouse there, guys. Bear with me. That is 0.5. It is not 0, but it's close enough. For all intensive purposes, it is going to work, but my numbers are offset right now. But nonetheless, onward and upward we go. So essentially what we're seeing here is we're seeing both of these lines fluctuate between a reading of 0 and 100. You're not going to see them go above 100, and you're not going to see them go below 0. It's not how it's going to work. But anywho, so quite simply, we know that the blue line in this case is representing the Aroon up, okay? And the idea is that the Aroon up is giving us a strength reading on the up, on the bullish trend, okay? It's giving us a strength reading of how strong that bullish trend is. Now, the peach or orange line, that is giving us a strength reading of how strong the bearish trend is. Okay, and you've got both of those fluctuating back and forth. So it is said that the Aroon up, which would be the blue line here, when it's up near this, where we put our green line, up near the 100, we are experiencing a strong bullish trend. That is one sign of a strong bullish trend. So there's more things to pull from it than that, but that is one sign of a strong bullish trend is when the blue line is up near the green line that we have marked off, which is our 100 reading. Now, the same is true if we find that our peach line is up near the 100. If the peach line is up near the 100, generally speaking, that means we have ourselves a strong bearish trend. Once again, just in and of itself, but there's more, once again, that goes into it than that, so don't get too confused just yet. Now, once these lines are down here by 0, okay, if our Aroon upline, which is the blue one, if the blue line is down by 0, that means we are experiencing a weak bullish trend. And the same thing goes true, or holds true for the Aroon downline. If the Aroon downline is down here by 0, then we've got ourselves a weak bearish trend. Okay, so once again, blue line up, peach line down. Those are the expected directions, or what those read lines are trying to give us in a little bit of an insight into. All right, so anywho, so basically some key takeaways to try to sum up some of my some of what I said in case it was a little bit confusing. So the indicator itself, the Aroon indicator, it's just composed of 2 lines. It has an up line, which is the blue line. All right, and this measures the number of periods since a high. And then there's a down line, which is the peach line, the Aroon down line, and this measures the number of periods since a low. Okay. So basically, if you're continuously getting new highs, all right, you're going to see this blue line stay up here pegged near the 100. So if it's new high, new high, new high, new high, we're going to be continuously as high as we can go, which is going to be up near the 100. And if we're continuously getting new lows, we're going to see this peach line pegged up near the 100. So if you see a new low, new low, new low. So for example, if this candle went ahead and dropped down to 266, that was a new low. And then the next candle thereafter dropped down to 264, and that was a new low, and then so on and so forth. We would obviously see the peach line pegged up near the 100, because that is a representation that the time in between the last new low has been very short, and we've already reset it, and we're keeping ourselves right up there. So that is an indication of a strong bearish trend, and the same thing goes true for a strong bullish trend, because the general theory is, guys, if the market is in a strong bullish trend, what do we generally see? Well, we see prices getting higher, and if prices are getting higher, then usually that means we're going to experience new highs. We're going to see new highs. Highs get higher, lows also get higher during an uptrend, so to speak. So realistically, the general expectation of what you're going to see during a strong bullish trend is you're going to see the Aroon upline, in this case the blue line. You're going to see it, a strong bullish trend would be, ideally, you're going to see it pegged up near the 100. That is a strong bullish trend reading. And you're going to see the Aroon downline pegged down near the 0. So you want a bit of a disparity here. So just like you see here, and you actually see quite frequently with it, you want to see periods where you're going to see the Aroon up. Over here, for example, where we had a very powerful bullish trend, you see this long bullish rally. We saw the Aroon upline way up here pegged on the 100, and meanwhile the Aroon downline was pegged down here near 0. And the reason is we weren't setting any new lows. We weren't setting any new lows. We were setting new highs though, so the new highs were pegging us up near the 100, but we were not setting new lows. Okay, so that is an indication of a strong bullish trend indicated by the Aroon. All right. So typically the indicator, like we were talking about when I opened those settings, typically traders will consider the real default value to be 25 periods of data. Now, why that is that's because that is the period that was kind of popularized and recommended by Tushar Shande when he created the indicator. So he said 25 period, and that's what he found his success with. That's what he found that it should, that's what he personally preferred. But realistically, there is no right or wrong answer. You just need to understand what the values mean. Ultimately, if you're using the values to find information that is valuable to you, once again, there's no right or wrong way to do it. It's just personal preference, like sensitivity settings on a mouse. Okay. But other than that, so 25 is what you'll hear across the internet as a quote unquote default period, but a lot of platforms default to actually 14. All right. I don't know why that is the way that is, but it is the way it is. And now you know. Now, when the Aroon, once again, when the Aroon up indicates that strength is or when the market is in a bullish trend, Aroon will generally dictate that with the Aroon upline being up pegged near that 100. And if the Aroon downline is pegged up near that 100, that's generally a strong bearish trend. Now, there's something else that comes into play that we're going to talk about, and that's the Aroon crossover. So there's crossovers that obviously are happening back and forth, where we're seeing these lines, okay, cross back and forth over each other. So when the blue line is crossing above the down line, so when the up line is crossing above the down line, the blue line crosses above peach, all synonymous, everything that I'm saying, that's generally an indication of a bullish event, okay? And the opposite holds true. If the down line, which is obviously our peach line, if that crosses above, okay, if that crosses above the blue line, which is our upline, that is generally considered to be a bearish event. And it's important to understand that because that is going to come into play when we talk about a few signal options that traders use, or that we can find using the Aroon oscillator. All right. So the crossovers of these lines can signal trend changes. And once again, that is going to be obviously one of the places that we pull signals from. But anyway, so it is important to understand that the indicator moves between 0 and 100, all right, and a reading above 50, which is obviously going to be right here in the middle. Okay, boom. A reading above 50 means that a high over a low, okay, whatever line is above 50 was seen within the last 12 periods, or 14 in this case, because that's what I have it set to, or 25 if you have it set to that. But anywho, basically, what I'm trying to say here is if you have your indicator set, okay, this will clarify it. If you have your indicator set to a period of 10, because it's oscillating between 0 and 100, if the lines, okay, if the indicator moves above the 50 mark, above the halfway mark, that means within the last 5, because that's half, that's 50%, right? That's half of the periods. That means within the last 5 periods, we have had ourselves a new high if the Aroon upline moves above that 50, or if it's the Aroon downline moving above the 50, the same is true. That means we've had a new low in the last 5 periods, okay? So moving above the 50 line means in the last half of the period that you're looking at, you're having yourself a new high or low, depending on which line it is that's doing it. And then a reading below, obviously, would be everything on the opposite end of that, the last 13 or more, or I'm sorry, in that case, if we were doing the 10 example, it'd be the last 6 or more. But anywho, don't get too confused, guys. I know it's talking about numbers sometimes does get confusing on the surface, but the Aroon is a very simple oscillator. Once you just kind of break it down and understand what it's looking at, it's just harder for me to talk about for whatever reason than it is obviously to use it. But that's just about everything. Sometimes I struggle when trying to talk about indicators, and I'm trying to show things on the chart as well. But nonetheless. So you might be wondering what makes this different than a DMI, which is the directional movement index, which is something that a lot of you guys use. The directional movement index is similar in the oscillator sense to the Aroon. But the DMI was the one that I think we talked about. It's by Wells Wilder, and it also uses up and down lines to show the direction of a trend. But the main difference is that the Aroon indicator, it is primarily focused on the amount of time between highs and lows. So once again, Aroon is time. It's giving you a reading based on how soon it's been since the last high or a low, okay? Whereas the directional movement index measures the price difference between the highs and lows. So just the big difference there is the DMI is going to be a measurement of distance between highs and lows, and distance and literally between the highs and lows of price that are being set. Whereas the Aroon is going to be a measurement of the time between a new high and a low, okay? Which, once again, it's neither here nor there. It's just whatever one you prefer. But the value, the argument for The Aroon is that when the market is repeatedly, time-wise, setting new highs, that is a very strong read. It's just apples and oranges. Both of them can be quite valuable, and you can argue for either one of them. But if a market is in a shorter period of time continuously setting new highs, that is a very valuable piece of information to be aware of as well. But anywho, I digress. So now that we know what the Aroon indicator is, all right, we know what the Aroon indicator is. We are going to talk about how in the world we are going to use this to possibly identify some trade entries, right? So let's go ahead and do it. There's two main trade entries, or trade strategies, I should say, that traders specifically using just the Aroon, okay, use. Now, once you understand how to use these, you'll understand how to apply and use it with other indicators or other strategies as well. And I encourage you to get crafty, get thrifty with it. That is absolutely okay, but we must start at the base. So the first one we're going to talk about is the breakout trading strategy, and we're going to have to see if I can find a nice example of this, okay? And the reason that I'm going to have to find a nice example of this is these are a little bit less common, but they absolutely still happen. And in order to do this, we need to focus on a period where we're finding the Aroon up and the Aroon down. So the blue and the peach lines, we need them to be moving parallel to each other. So right here, for example, you'll notice right where my mouse is, you'll notice that we had a period where the Aroon up was sliding down. And let's go ahead and just throw some lines on the chart here where we are. All right, so during this period, and that I just kind of highlighted here, the Aroon up and the Aroon downline, they were more or less mimicking each other. Both of them were sloping downwards and maintaining the same distance from each other. That's what I mean by parallel. So we've got a period here where the market is, mimicking each other. And when this is happening, we talked about already that the Aroon upline being pegged up near the 100 is generally an indication of a strong bullish trend, so we get an idea to buy perhaps around those times. And when we have the Aroon downline up near the 100, that could be a good indication of a sell. But when they're doing this, whether it's up or down, whether they're sloping up or down, this is usually an indication of them when they're sliding back like this. This is usually an indication of a consolidation period. And we've talked about consolidation in the market. So when we see this happening, this can be a time to get ready for a buy or to be anticipation of a breakout of the consolidation. So the Aroon lines can let us know that we're in consolidation and be ready for a trade based on two possible outcomes. So we look at this period and we identify, okay, boom, we're mimicking each other. We're on the way down. We have a consolidation period happening. And if you look at the market right around this period, okay, if you look at the market right around here, it's kind of obvious. Let's go ahead and let's give ourselves a shady box here, or shaded in box, not so much a shady box. All right, we'll go here to here, something like that. Okay, so that's on the bottom of the bottom wicks here. These, and we'll get rid of, let's change these to purple, make it a little bit easier on the eyes. All right. Okay, so what I did is I changed the outline box to highlight down here on the bottom our period of consolidation highlighted by the Aroon oscillator. And what we had is a little period where we kind of moved sideways. And this is a very small window that this happened in. This is a very small window of consolidation, but we're going to use it because it's it is an example nonetheless. So lines moving parallel representing a period of consolidation here. Now, where is the break going to occur? Well, the bullish break is going to occur, obviously, out of the resistance of the top of the consolidation, which is going to be somewhere, obviously, around here. So if we were to move above and trade above this location here, we would be considering this a break at the consolidation. And if we were to move and trade below this, right here, we're going to consider that a break of the consolidation as well for the bearish side. So now that we've identified what consolidation looks like with the Aroon oscillator, all we had to do if we were trading this in live time, or what we could have done, and this was very, very recently, okay, this is just a matter of a couple hours ago, we watched the market go ahead and break on through this period, all right, moving along, moving along, moving along, and it broke right here. So right over here, okay, right where my little mouse hand situation is, you'll notice that price traded on it one more time and then boom, fell below it and began using it as resistance. Okay, this is an example of a break of the consolidation. It's a breakout of the consolidation. All right, this is the period that was consolidated. Now we were looking for the market to trade below or above it, and that is whatever comes next. And whatever comes next in this situation was we broke and traded below it, which is a bearish sign, which means our entry to sell theoretically could have been right here. We would have been looking to sell the moment that we traded and closed below this. And if you want to be safe, you can wait for a back test. And we did actually get a back test right here. And we could have looked for a short opportunity. All right. And boom. And if we had one. Now, theoretically, if we took the short opportunity, we probably would be in it still or just about closed out right where we're at now. And the reason that I say that is a logical target is going to be, if you're just using price action and you're using the Aroon for the entry in, you're not using the Aroon for the entry out. If you're using the Aroon for the entry in, my target for my short in this location is going to be the next substantial swing low, which happened over here on the left. So I'd be looking for some type of an exit right around this location here, okay? So that would be an opportunity to exit. That'd be a safe bet in my opinion, because that requires the market, it gives it a nice goal for the market to go test, but it doesn't require the market to break it in order to continue further. So it's giving the market a logical expectation without a whole lot of anything to give it too much support along the way. So a pretty safe trade in my opinion, had I been able to grab this one, but obviously this is just a potential outcome using a trading breakout. I'm sorry, using an Aroon breakout based on the consolidation there. So that is what an entry would look like using the Aroon to identify consolidation and trading the breakout. Okay. Now the next thing that we can do with these breakouts, the other way that we can jump in. I'm not as big of a fan of this one, but this is something people absolutely do. And people argue that this will give you a faster entry, but with the faster entry, in my opinion, you come up with less confirmation. But with this opportunity, so once again, we identify exactly the same way. We're using the parallel downward moving lines to find that consolidation period. And then we're going to go ahead over here and we're going to wait for an Aroon cross. So the Aroon cross in this scenario was the Aroon downline crossed above the Aroon upline. So what does that mean to us, guys? That's bearish, so we'd be selling. So the signal generated by the Aroon cross happened at just before, actually. It happened just before we would have gotten in, waiting for price to actually break the consolidation zone. So our entry on one event would have been, we'll do a yellow arrow. What? So the yellow arrow, the Aroon cross happened right here. If I can get my, all right, so the Aroon cross happened on this candle here. So we would have been looking for a sell here. Okay, we'd be looking for a short here based on the Aroon cross that happened down here. Okay, now doing it the way that we initially discussed, waiting for price action itself to break the consolidation that has been highlighted by the Aroon, we would have had a short opportunity that would have happened one more candle to the right, which would have been right here. So very, very close in both of these, very, very close in this particular scenario. Generally speaking, though, you're going to find that the Aroon line cross is going to get you in earlier than the consolidation. Sometimes it might be the other way around, but more times than not, you'll find that if you jump in just on the cross itself, it'll happen before that in the consolidation period price is actually traded and broken below it, especially if you're waiting for it to back test. neither one of them are incorrect. Both of them are widely accepted trading strategies. So I definitely encourage you to play around with both of them and see how you like them. Of course, demo accounts are out there for a reason. You can get your experience in, you can get your practice in and get a feel for it and see what you like. But that is one trading strategy, okay, to get an entry in. So once again, this could have been turned into a buy all the same if we just inverse the direction that the market went, and we'd be waiting for the market to push above this green line, and then we would have had our breakout entry for a buy. And if we were looking down here, it would have looked like the Aroon line up would have had to cross above the Aroon line down, and then we would have been using that as our entry opportunity. But once again, my preferred method is to pay attention to price action after we've used the Aroon to identify the consolidation period and marked off the bottom of the consolidation, the top of the consolidation outlined by that period on the Aroon, and then looked for the entry once price has decided to trade above or below the consolidation in the direction of that. So once again, the Aroon, as you can see here, this is a live, just about a live example here. It would have created some nice entry opportunities. Now, as far as a stop loss and take profit goes, I am still very old school. I do like to use logical price action to define where my take profit's going to be, as well as my stop loss. Now, you could argue that you could put your stop loss just outside the top of the consolidation zone. In this case, it would be a little bit wider than I'd want it to be, but you could put your stop loss just outside the green line and use that as your in the case of your sell, if it goes that high, we're going to get out because that's no good. But nonetheless, it is going to be entirely up to your preference. There's no right or wrong way to do it. You could also use the Aroon indicator in and of itself to get you out if the Aroon starts moving. So if we're in for the sell, okay, if we're in for the sell and the Aroon indicator moves below 50, which it did over here, right there. So right around this area here. So somewhere in the charts over here, we could have used the Aroon indicator as an opportunity to get out because our downline has now fallen below 50, which is an indication that the selling strength is getting a little bit weaker, even though we are still in a bearish trend. We can jump out of the market if we're trying to get out of a scalp. That is a very tight way to get out if you move below 50. You can extend that further and say if it moves down to 0 or something along those lines, but that might hold you into the market too long. Once again, it's going to be personal preference, or you could even use an Aroon cross again to get yourself back out. So you can play around with it and decide what you want to do. The ceiling is yours, and you already understand what the indicator is and what it's reading, so you should be able to come up with some of those opportunities as well. Now, the second trading strategy, okay? The second trading strategy that we're going to use is going to be basically a deviation, okay? We're going to look for a deviation. So this is when we use the Aroon indicator to identify the underlying strength of the trend. So what does that mean? Well, let's see what we've got here. I have to find an example. This one is much harder to find. The first strategy I told you, you're going to see happen a lot more often, and it's a very easy to understand strategy, but we're going to go ahead and delete some of the stuff on the chart, and we'll see if I can find you another example here that in live time here. Let's see. Leave my green and red down there, but I think we have the idea here. Well, let's see. Just bear with me a moment. I'm just trying to find a good example. I already see some stuff we might be able to use, perhaps. All right, this will work for us right here. We'll just use this one. It's not the greatest example in the world, but it is an example nonetheless. So what we want to focus on right here, folks, is the Aroon upline being up here pegged near 100. Okay, so what you'll notice sometimes is when the Aroon is kind of hanging out near the top, it's hanging out near the 100, whether it's the up or the downline, doesn't matter. Price generally will not always be able to continue moving forward. So you might get a period where price kind of stalemates and moves sideways a bit. We kind of got that here. This is not the cleanest example. So let me see if I can get some arrows here just to try to outline what I'm talking about. So here we have price working its way higher, okay? And we'll do the arrow to right around there. So we have price working its way higher. And down here right below that, you can see that the Aroon kind of has pegged off sideways because it is pegged off at the 100. And it actually started to dip back down below here. Okay, so the Aroon up started to go down, but we have a deviation where price, instead of going down at this period, it just has gone sideways. Okay, so while the Aroon is going down, all right, going down, back down to zero, price actually said no. It actually marginally went up, not really. We more or less went sideways here instead of going down. So that's something that I wanted to talk about here, and this is called, there we are. We'll just move it like this, make it a little easier. Okay, there we go. So our outlines here are kind of giving us a little bit of a lineup here. So this is a trend strength strategy. That is what this is considered by jumping in with the Aroon. And the reason is the Aroon is falling off, and when the market is pegged up here, okay, when the Aroon is pegged up here near this 100, there's two things that that are likely to happen, okay? And one is going to be a reversal, because that means the market is, it's not going to stay up forever, and we're anticipating the reversal. And the other is going to just be a pullback, okay? And the idea of paying attention to the deviation between the Aroon and the price is it's hinting at which is happening. So if we see the Aroon start dumping down like this, going all the way back to zero after being pegged up here, this is the Aroon upline, of course. So after we see the Aroon up dumping back down, going back down to zero, after being pegged up here at the top with a nice bullish rally and the market just kind of moves sideways, if the market stays moving sideways or with little to no change, it can even have a slight downward move, but not much, where it's very, very clearly deviated, the direction of price is very clearly deviated from the direction of that Aroon upline. That's usually an indication of a very strong bullish trend, and it's an indication that there very well might be a pullback coming, not so much a reversal. Okay, so this is the telltale sign when we start seeing price just kind of holding off, going sideways. And what we're waiting for to get in is we're waiting for this Aroon upline to dump all the way back down towards zero, and actually can get underneath our Aroon downline yet again, and give us another opportunity to get in when Aroon up decides to gain strength and starts coming back up and crosses back above. So at this point right here, there we go. Oh, I didn't draw the line. 1 second. All right, I'm not getting lines drawn. I don't know why. Come on, come on, come on. Why are my lines not drawing? My lines aren't drawing, and I don't know why. Line. Line. Draw me a line. Okay, so we can draw horizontal lines, but why can I not draw a vertical line? What in the heck? Whatever. So we'll do it right here. Okay, so where I have the up arrow, for whatever reason, I don't know if I've got something highlighted that I'm not catching, but nonetheless, I'm not going to waste any more time on it. At this location here, this is when the Aroon up, as you can see down here at the bottom, the Aroon up then recrossed back above the Aroon downline. Okay, and this is after witnessing this sideways deviation in price. We'd be looking for the buy at this location where this big, tall, upwards pointing arrow is. Okay, right here would be looking for a buy. And the reason that we're looking for a buy at this location is because this is an indication that after all this time, if the buyers were able to hold on to the market despite not being able to set new highs, that's a strong indication they're not willing to let go of the bullish trend just yet. And there's more bullish activity to come. It just has not happened yet. And this indication here, when the Arun up crosses back above the downside, is consider the market becoming reinvigorated, and we're looking for an opportunity and expecting the market to then go ahead and rally up off or rally past this point. And we did get a nice little rally opportunity here as we worked our way to the right. So we saw the market actually give ourselves a nice short-term rally. And we'll just kind of peg this point here. So right around that location here. So once again, at this the green arrow, let's get rid of the other ones at the moment. So at this green arrow, we'd be looking for our buy entry, okay? We'd be looking for our buy entry, and immediately we had a nice, very strong pop here. So we already had a substantial gain in this location. Very nice scalp opportunity would have been had anywhere along this line. This is a good amount of a move. But if we held on to it and we wanted to go for more, we would have had to just hold on as it got a little bit scary over here. Not really scary, almost no heat whatsoever, but we had a slight dip right below our entry point, and then it went up for even double the distance. And at this point, you've got a huge gain potential with very little heat against you, indicated by the Arun. And then again, it came back down. After this point, you've got all kinds of interesting information happening over here with the Arun. One of which is at this point, we're seeing the Arun start to peg up towards 100. And that's an indication that once again, we are finally starting to see the trend get ready to reverse as long as price starts to agree. And when did price start to agree? Well, we have the Arun up. The Arun downline getting up here near peg near the 100, which is a bearish sign. Price is starting to slope downwards, but the Arun up came back up here and continued higher. And then again, we start to see price start sloping downwards, and here comes the Arun down. Probably a good time to consider abandoning the position at this point. You've had quite a few opportunities to get out along the way. And if you're holding past all of these warning signs over here, I don't know what to tell you at that point. But nonetheless, a nice opportunity to get in here could have been found using just a trend strength read off of the Arun. Once again, this one's a little bit trickier to find, but what we're looking for is we're looking for a period where the trend indicated by the Arun, whether it's up or down. If the Arun up is up here, peg near 100, and the price trend itself, price action itself, if it's moving upward in agreement with it, and then it starts moving sideways during a period or just not doing much of anything when the Arun actually starts dumping back on off, that's an indication the market's trying to hold on to that trend, and there's still some more bullish activity to come. And we can use a recross of the line as an entry point to catch the activity that's to come, okay? So that's how this works. And if you inverse that the other way around, you would find yourself some selling opportunities. And there's plenty of those as well. So once again, this is going to be a trend strength entry based around the Arun. My personal favorite though, and it's a little bit easier for people to understand generally speaking, is going to be the consolidation period breakout that is found and highlighted by the Arun. Okay, because I like that one myself just because the Arun parallel lines highlight where that consolidation period is. And then after that, we don't really need the Arun too much beyond that point because we outline the high and low of that consolidation period, the top of the consolidation, the bottom of the consolidation, and we're just waiting for price to trade above or below that. And as soon as we break above or below that, we're just trading in that direction. It's a very simple way to trade, so to speak, but very logical and does have the ability to provide some pretty comfortable and easy opportunities as well. But nonetheless, I appreciate everybody joining me today for a weekly Wednesday discussion. As always, we were able to talk about the Aroon oscillator today. The Aroon oscillator is a fun one, and it's one that's not often talked about, but it shouldn't go under the radar. It's definitely worth understanding what it is and how it works, because we only talked about using specifically the oscillator and really just a little bit of price action to justify trade entries. But I'm sure you can imagine how, if you use the Aroon oscillator in conjunction with any of your other trading knowledge or trading indicators out there, it can definitely become a valuable tool for sure. But either way, I'm excited to see what you guys, are able to do with it. And as you go along, once again, play around with it, use it on your demo account, see how you like it. You might find that it could be a nice little increase to the ROI for you out there if used correctly. But I appreciate y'all joining me once again for another Wednesday weekly discussion. I am going to be closing us down here. Have a wonderful trading week. Be safe in those markets out there, guys. Keep killing those markets. You guys got this all along. I will see you all very soon. Cheers, everybody. Over and out.